Scott Bauer is the CEO of the Prosper Trading Academy. You're listening to the Wintrust Business Lunch on WGN, and this is a return visit for Scott as we look at some of the trading taking place on the markets today. Hey, Scott, how are you?
John, I'm great. How are you?
I'm pretty good. NASDAQ slipped a little bit, but it's not a huge downward death spiral today, so we got that going for us.
No, absolutely. And, there's just a little bit of concern about rates ticking back up just a little bit. Also, there's some weakness in the semiconductor space today, but, really this is nothing to write home about, quite frankly.
So the NASDAQ is obviously more tech-centric. The Dow is the big 30, and then the S&P is the broadest index. What about those other two? I mean, what are you seeing generally in the lay of the land today?
What's really, to me, as a trader and someone, really in tune right on the floor with the depth of the markets, is the lack of volatility right now. And we have had some major volatility, obviously, over the last few weeks with the whole banking scare and the banking crisis. But overall volatility in the market right now is pretty cheap. So there's not a lot of concern, at least from the retail side of things, that the markets are in for any sort of, deep fall in the near term at all.
Yeah. I was just thinking, though, about this banking crisis, such as it is. I'm still not sure crisis is the right word, but scare, if nothing else. But it just seems like we never get a break. There was George Floyd, then there was COVID, then there were supply chain issues. Obviously, a lot of these things related to each other. But every time you thought, okay, I'm getting out of this, we're going to get back to normal. And that imagines a scenario where we're still dealing with too many dollars in the marketplace to try and get us through COVID. And even as that all seemed to be settling, then lo and behold, banks go, wait a minute, interest rates, we're upside down on these long-term notes. And so then you say, okay, we're going to get through that. You just wonder when we're just going to have a level playing field for a while and these things will work themselves out.
Yeah, it's going to be a while. And I don't know what the next shoe to drop is going to be. But there's a lot of overhang in this economy, obviously trying to get inflation under control, the massive rate hikes that we've seen over the last 12 to 16 months, trying to get back to some sense of normalcy there. So it's going to be a while, and I think investors should realize that. And as everybody always says, John, you can't look at your 401ks, you can't look at your accounts on a daily basis. I think what people can take away from what is going on right now, though, is that our system is safe. Does that mean that there can't be disruptions? Of course there can, but really our system is safe. And I think that the public and retail really needs to find comfort in that. I really do.
Do you think there's some opportunities out there right now, Tom? Or Scott, rather?
Absolutely. Yeah, absolutely there are. I think that the pullback that we've seen recently in the energy space, especially with oil, and I know oil is up over the last few days off those lows. I think energy is still a great place to be for the rest of this year, whether it's in stocks like some of the oil producers, like a Chevron, a Marathon, or some of the other people in the space. And quite frankly, I also like tech because even though NASDAQ's a little bit weaker today, we've seen a nice rally. It's kind of leveling off a little bit. And if rates really are have peaked and they are going to start to come down, tech, big tech. I'm not talking about, some of the riskier plays. I'm talking about the Microsofts, the Apples. NVIDIA is probably a little bit pricey. I'd wait for that to come in. But those are the types of places that I think 6 to 9 months from now, you're going to be happy that you put some money into.
How do you feel about financials right now?
I like them for the long term. They're probably short term the riskiest of any space that's out there just because of the headline news and what's going on with some of these regionals. But again, if you looked at a JP Morgan, a Wells Fargo, even a Bank of America and said, okay, I'm going to buy it now and I'm going to look at it 6 months from now, I think you'd be very happy.
How do you feel about retail generally for the rest of the year?
That's an interesting one because consumer confidence came out this morning, and surprisingly, the consumer is very confident. Big uptick, even in the face of everything that's going on. But the retail landscape is really changing. Consumers are changing their spending habits, and they're spending more on what they need and some of the less of the non-discretionary type of goods. So retail does not excite me right now. The safest place to me in retail would be a Costco, a Walmart, maybe even a Target. Some of the other ones, though, more boutique-y, like a Lululemon or Ulta, I'd be a little bit cautious of those.
Because their products tend to be a little more expensive?
A little bit more expensive, and those are the first kinds of products that people are going to cut out when they need to go get a loaf of bread, or they need to, get the essentials for their family. So I think we're still in that environment, especially, people are starting to get a little bit more concerned about the job market. Even though we're seeing, the Fed on a daily basis saying how strong the labor market is, people are definitely getting concerned. We're starting to see layoffs, almost every day from some big firms. So I think the consumer is taking note of that, and they're being a little bit more choosy in where they're spending their money.
Scott Bauer is the CEO of Prosper Trading Academy. Want to know how to trade? That's what they do. That's prospertrading.com. Scott Bauer over at Prosper Trading Academy. We'll talk again. Thank you, Scott.